Facebook is changing their how you go. I don't know. My computer is a little slow. Facebook made some changes. Okay. I'm gonna share to my Facebook, but we should be live in like 5 seconds. It says we're live on YouTube. Let me double check. Yes, it does have us live. So I'm going to share from my YouTube to my Facebook. We'll get started, go through it. Thank you so much for your time, Mr. Robertson. And I'll kind of start over. So I am Jamesia Jonay Hawk. I am a licensed real estate professional in the state of Illinois, being joined by Javon Robertson, a who is a real estate loan officer. He's been a loan officer for about 21 years, right?
21 years on the head. Yes, ma'am.
Wait. Now I got feedback. So Javon has been in the mortgage industry since what, 1999? Is that correct? So
Correct.
survived the first bump in the road, or you survived the first bump in the road in 2008. I was not in real estate just yet then. And we are now in the midst of some changes in how mortgage companies are lending, right? Is that fair to say? So recently, the government did something to help. What I was reading, they did something to help, and the mortgage industry is actually saying that they have caused harm in the industry because they purchased or put money into mortgage-backed securities. Is that correct?
Yeah. So I wouldn't necessarily say that it's caused harm. It's actually, the move was made to infuse and jumpstart the economy. And so typically when you see something like that, basically the Fed came in and said, hey, we're going to throw some cash at this thing and address it to put some liquidity out there so that you can keep things going from that perspective. So causing harm, I wouldn't say that. Is there some confusion as to how all of this is going to play out as it relates to mortgage and people like you and I? Yeah, but if you go back in history and you look at some of the things that have occurred, just over the course of history, the 2008 mortgage crisis, being the most recent that we can, both remember, money was thrown at this thing, and the Fed came in and did their part. And, and we saw some really low interest rates. We saw a lot of restrictions, but we also saw a lot of loosening of guidelines. And so, is mortgage and real estate going away? No, it's actually what keeps the country afloat. Because it's the largest investment most people are going to make. So we're fine. We just we've got some bumps that we're gonna, have to deal with for the next month or so, couple of months or so. but I still think that this is definitely the best time to purchase a home. You know, if you got folks out here looking to get their credit repaired or restored, this is definitely the time to get on top of it, so that you know, when it is your time to purchase a home, you'll be ready.
Absolutely. So I'm glad you said that. I know that some people, so what we're experiencing as real estate brokers are a few different things. I have people who are pre-qualified, pre-approved, that still want to move forward and purchase within the next 90 days. But what I also know about some of those buyers is that financially they're more solid. So they have the savings, they have the credit score. They're not, they feel like they have the job stability, job security, so they're not fearful of what's going on. And then we have investors that see the opportunity in this market and want to move forward. And then there are other people who are saying, well, let me think about it and maybe I'll buy later. Let's see what happens after all of this is done or we go through this process. And some sellers are feeling the same way. Has that been your experience?
So I am getting that, but let me give you my advice on that. So back in 2008, as a result of the well, let me just go back even further than that. George Bush, when he was in office, he came up with the Making Home Affordable program. You're familiar with that, where people were able to refinance, and you know, even if they were underwater and that kind of thing, right? And so it was very restrictive. Interest rates were high. You know, you had some caps on your LTV and all that. Obama came into office and he was able to, hang on just a second. Sorry, I'm still working. Obama got into office, and then he, you know, there was some adjustments made to this program. Okay. Well, just like then, there was a lot of uncertainty, a lot of conflicting information that was getting out to the public. A lot of people just kind of didn't know what to do. You know, we needed, you know, people needed help, but no one really had a clear direction. And so, but then once there was some direction, there was still a lot of people just kind of playing the gamble, wait and gamble game, right? And so, as a result of that, people just kind of sitting on the fence, waiting to see what happens. A lot of times you miss out. You know, sometimes these programs, they come and they go. And, you know, by the time that you make up your mind to come out and do something or, you know, get something done, it's too late. So, you know, like now I've got about 28 clients right now where we are just sitting in wait mode, waiting to see the bank's response to the Fed's announcement to interest rates, you know, being lowered as a result of the Fed lowering their rate. And so I got them all, you know, the applications are in, documentations are in. It's just a matter of locking the rate once we're able to. These are people that they'll be fine. They'll benefit from this this situation. You know, and you got those folks that, like I said, they sit on the fence and just kind of, you know, go into wait and see mode, and they miss out. So that's my response to what you just said. If you are looking to do something with regard to buying a house, you know, the best thing that you can do is get all your documentation in. And when your lender is able to lock your rate, lock it up. Okay. A lot of the, and we're going to talk a little bit about some of the new stuff that's out, new guidelines that we're seeing as a result of this pandemic. But even still, you know, you want to get all your stuff in and be ready to go once it's time, because just like anything else, if it is a a load of a backlog of files that you're dealing with, just like anything else, you got to wait in line. You got to wait until that pipeline clears out. And a lot of times, if you're not locked and loaded, you don't have an application in, you may miss out. So sorry about the rant. I just wanted to get that out there, because a lot of people, they don't take it. I do it when I get ready to do it, and you know how that goes. So I just encourage people to get their documentation in, be ready to go, locked and loaded, and the most you have to do is lock your rate when it's time to lock your rate.
Absolutely. So I'll expound on that a little bit, and then you can as well. So prior to this FHA guidelines, they had a minimum for most lenders of a 580 credit score. Now, for me as a real estate professional, I always stress to people, don't shoot for the minimum. Well, one, with a 580 credit score, and Javon can touch on this when I'm done, that means that you have money to bring to the table. And I think that sometimes people aren't understanding that. It's like, oh, I have this 580 credit score, I don't have any money, do I qualify? No, right? So you qualify, but you may not make it to the closing table. So 620 was about 640 minimum score. Has to meet that minimum requirement, but guidelines have changed, and we received the communication about that, and even on the hard money lending side. So for investors, hard money lenders have tightened up their funds. You have to have experience, you have to have the credit, and of course you have to have the money. So on the traditional and non-traditional side, lenders have tightened their guidelines and put some extra added restrictions on there. But for me as a real estate investor and agent, what I get from that is be solid on paper, right? You have great credit, you have savings, you have reserves, you're literally ready to buy a house.
Right.
As opposed to someone who comes and says, okay, I have a 620 credit score, $250 in the bank. I've only been on my job 2 years. You're one emergency away, whether it's COVID, a tree falling on your house, or anything, a flood, from being in a position where you might lose your home. So this is kind of forcing people to be solid on paper and actually ready to purchase so that they can weather a storm.
And I'm glad you said that. It is, even though we offer like the, FHA 3.5% down, 580 credit score, like I offer it, but I don't sell it, right? I don't sell it because it is very limited in the sense that you don't qualify for down payment assistance oftentimes with a 580 credit score. What is not marketed, when you see these, realtors and loan officers marketing 580 credit score, what they're not telling you is that, as a risk mitigator, you're going to need to have some type of reserves in addition to your down payment. Okay, so if you just using $100,000 as your purchase price, FHA is saying, okay, you can come in with 3.5%, which is $3,500. So you may need, if your mortgage payment is, let's say, $800, depending on the property taxes, you may need 3 to 4 months of reserves just to get to the closing table. So that means in that instance, you'll need $3,500 plus $2,700 to $3,200 in reserves just in 4 months mortgage payments. So that's oftentimes not communicated enough. And it's one of the reasons why I really, I don't sell it. The other thing is, just as it relates to what we're dealing with right now, those credit score, those are when you're that low of a credit score, those are the ones that go away first. So like right now, just to your point, we're seeing where lenders are putting overlays in place where you have to be at least a 640 credit score. Okay. And then you've got to, like, we got something yesterday where at a 640 credit score, we're asking for 1 month of reserves. We're making sure that your debt to income ratio doesn't exceed a certain point. So the game changes. When it comes to pre-approvals, when I put a pre-approval out there, I validate all your information, and I'm very specific about the time frame in which you have to go out and get a property, because I know, just based off of what I've experienced, what I've seen in the years that I've been in this business, when the credit is sketchy, a lot of times those programs go away. They go away, and sometimes you may not get notice that it went away, and so that window of time that you have to get your pre-approval, find a house after you got that pre-approval, a lot of times is a short window. And so I've got some conversations I got to have with some people this week where they were pre-approved. Now the pre-approval means absolutely nothing until further notice. So it is forcing people, like you said, to go out and do some more things to their credit. Pay some things off, dispute some items if that's what you need to do to get those credit scores high enough to get mortgage financing.
I was just about to ask, I'm in a few real estate groups and you touched on it. I did see where some people are having to reach back out to their clients and say, you no longer qualify. We've been out house shopping. You were qualified. You had this approval, but now you need to put yourself in a better financial position to continue this house shopping process. Now, you mentioned documents and making sure all documents are in. Can you specify what those documents are and how most lenders like yourself prefer to receive them?
So I sent out a huge email. I think I put you on this email. I'm gonna blast you for not reading it. So we as lenders, we receive, I probably get 200 to 300 emails a day. Just, any given day, I've seen that number, higher, especially considering what we're dealing with. But we're human. I share this with people all the time. If you're gonna send something to me, don't piecemeal it. Don't send me a pay stub Monday, or I'll get you the W-2, Wednesday. I'm gonna send you my tax, because I get all these emails now. I got to stop and sift through all of my emails to see what you sent, and then when I call you and say I don't have, I sent that already. If I don't see it because you decided you wanted to sift it through and piecemeal it through to me, send it again. Especially since I got you on the phone. But the best practice is to get me everything all at the same time. If you got to send me 2 separate emails, part 1 of 3, whatever, send it all at the same time, because now I got it. I'm focused in on it. I'm not distracted. Phone rings all the time off the hook. You can speak to this. We get busy. We get slammed. We're always looking for, looking to help other clients that are just as important as you are. And so, the best thing to do is to get your items. Another thing, and I got to stress this because I got clients that I'm dealing with now who are in attorney review. Let's say, for example, you got a contract, your attorney review period isn't up yet, and you got some things that you're really concerned about. Your attorney and the seller's attorney, for example, addressing with regard to maybe some repairs, right? And you don't want to move until you can get these sellers to agree to repairs, right? We see this all the time, right?
Mm-hmm.
And what do people do? Now, keep in mind, if your rate is locked, you've got a window of time to get this deal done without having to pay for an extension on your rate. So the worst thing that you can do during attorney review is to start sending stuff over as soon as you feel like as soon as your attorney has figured out whatever needed to be figured out during this attorney review period. Sometimes attorney review doesn't last 5 days. Sometimes it's 10 days, but that's 10 days you just lost. Get me the information that we need. That 10 days we could have had your file into underwriting out approved, and now we're just waiting on maybe a close date perhaps, or homeowners insurance to be finalized. So I can't reiterate enough, you getting your documentation into your lender so that they can do their part. And if the deal falls apart, whatever, at least you got all your stuff in, and maybe you've got enough stuff in to maybe move on to another deal. And now we're not chasing you down for additional information. So the other part of that is like now I got a full application on a few folks. If the application wasn't in, if the rate wasn't locked, they wouldn't have qualified based off of the new overlays that are in place. So kudos to those folks that got their information in time. And so so that's what I'll stress to people: get your documentation in, whatever that may be, pay stubs, bank statements, copy your earnest money deposit check, whatever is on that list. And good loan officers out there are going to spell it all out for you, in an email, or however they communicate this information to you. Just go by whatever it is that they spelled out for you and get the information in, so it can be uploaded to your file. Underwriter can review it, and we can get you onto the closing table.
So rule of thumb, usually what documents should someone have?
Rule of thumb, we're always going to need 30 days of pay stubs. We're always going to need, and I probably over document files because I hate going back and forth with people about, hey, give me this. It's just not a good experience. But your last 3 years of W-2s, your last 3 years of tax returns, 60 days of bank statements, being able to document large deposits into that bank account. And when I say 60 days of bank statements, 60 days of bank statements showing that you have the ability to fund your loan. What does that mean? That means if you have a $200,000 purchase that you're making, and your reserves requirement is, let's say 1 month, your mortgage payment is $1,000 or $1,200, and your down payment is $7,000, because that's 3.5% of 200,000. You need to show me a bank statement with at least $8,200 in that account. Please don't send bank statements where your balance says $14.36. Your loan is not going anywhere. And I see that all the time too. So yes.
Can borrowers show their 401ks? And I don't know if you saw, I just read a Forbes article where Forbes is saying that as of Friday, individuals can pull money down from their 401k without penalty. But also when we're talking about showing reserves or having that money saved, can a borrower or a buyer use their 401k? And then if so, how does that work? Like, let's say I have $15,000 in my 401k and I need $15,000 of reserves. Would that qualify? Does it work like that?
No, it would not. No, it would not. We could use a portion of it. So what we're able to do, because 401ks lose value at any given time, and so the rule of thumb is we can use a percentage of that 15,000. Usually it's like 65%. So now on the flip side of that, if you're using it for down payment, you can pull from it and use it for your down payment. And all we're looking for is a copy of the full current statement, most recent statement, as well as a copy of the terms of withdrawal. And this applies to any retirement vehicle that we're able to pull from without you having to terminate employment with your job. So that could be, an annuity, it can be a 403B, it can be a 401k, it can be, whatever other retirement vehicle that's out there that would allow for you to pull from it and not terminate employment.
Mm-hmm. So
and the same thing applies for reserves. If there is a reserve, let's say we're using the reserves requirement. Let's say we're using your retirement or 401k in this instance as your reserves. You can use it, but we still want to see what the terms of withdrawal, what your terms of withdrawal is for that retirement account. So we know we're not pulling from it. We're just documenting the file with it and including the terms of withdrawal along with that. So that would be something that would fall on my list of items to get into me, along with pay stubs and W-2s and bank statements. Did that answer your question?
That does answer my question, because I know sometimes we can't always give all information, but I don't know how you feel about this, but sometimes I get bothered when I see things like you can buy with a 580 credit score, or
I do.
Your 401k, and people aren't really saying, yes, you can use this. However, there are some stipulations or just some guidelines that go along with it. Someone may think, oh, I have this money in my 401k, I can just use it, or show proof of it. And it's like, yes, but we're only going to take 60 or 65% of that. So making sure that people are fully educated when it comes to home buying. And one thing I'll see is there's some real estate professionals that feel like, oh, maybe I should not be reaching out to potential buyers, reaching out to potential sellers at this time, as if they're taking advantage of people. But from my experience and what you've experienced and other real estate professionals are experiencing is people are still buying and people are still selling, even with what's going on. Housing is a need. Some people have to move. They've given their landlord, their notice, and they're just interested in buying because they feel comfortable. And okay, we all basically have to pay for somewhere to live. So has anything changed on the conventional side then?
Yeah, I was looking through some things here. Let me take a look. Not a whole lot. Yeah, I'm just looking at this overlay checklist. Yeah, not a whole lot. A lot of this wouldn't even apply. Yeah, there isn't really anything out there that's really changing that I see. I mean, and that doesn't mean that it has not affected other lenders, but I know with us, it has not. I'm not seeing anything. Most of the changes that we're seeing are with your government products. We're also seeing a lot of the down payment assistance and bond programs going away, being paused, as well as your non-qualified mortgage products, or NQM, the new word for subprime. A lot of those programs are temporarily paused until they can get this thing figured out.
So kind of final remarks, what advice well, let me go back. Down payment assistance, right? So, and Javon and I have spoken about this. We met professionally through Facebook. Ironically, if we could touch on down payment assistance briefly, or you, from the standpoint of so many buyers come along and they're like, I want down payment assistance. I think they feel like they're getting something free. And it's like my friend's cousin, sister, uncle, auntie, they, got this down payment assistance in order to buy, and I want down payment assistance too. Some buyers feel like it's a right of theirs to get down payment assistance. Can you shed a little light on how it works really quickly, and
So,
why it is or is not a good idea to
all right, so I'm going to make a couple of points,
the
and I'm
best
glad.
time to utilize it?
Yeah, I'm going to make a couple of points, and I'm going to elaborate on that. I'm glad you did. First off, I want to thank you for having me. I know you work with a couple of different lenders, and um, you know you guys collaborate through Facebook and all your different mediums. And so I know you could have worked with, talked to somebody else. So I really appreciate you for having me. Secondly, one of the things that we connected on, and we were we had in common as far as our thought processes on this, was down payment assistance. This is one of the reasons why we connected, and we look at things financially through pretty much the same lens. And so you're one of those agents I got a lot of respect for, because you think about this. Not thinking about it is, and not having it top of mind for your clients is how, in large part, how we ended up in the situation that we did, in 2008, where people just were not taking into consideration that, when you put folks in these risky loans and they don't have any skin in the game, one escrow change, one rate adjustment. And like you said earlier, you're a broken transmission, or, a leaky faucet away from losing your house. And so that's what this down payment assistance, a lot of these programs kind of, promote that. Now, is down payment assistance a bad thing? No, it is not a bad thing. And sometimes they can be really helpful for families who really need it, right? I like to see when the credit score requirements are increased on these programs, because the likelihood of people with that have higher credit scores that get it, they're going to make their mortgage payment no matter what. And then two, these programs don't go away as a result of people not making their mortgage payments. As far as down payment assistance goes, like you said, it is not free. Sometimes these programs are so restrictive in that, let's say, for example, here's one of my favorite examples. Let's say you get down payment assistance, and your interest rate associated with that down payment assistance, your free money, right, is 4.5%.
Mm-hmm.
You're locked into this down payment assistance program in that you cannot move, and you cannot refinance your mortgage for 5, sometimes 10 years, right? You're locked into it. So that $7,000 you got in down payment assistance, you're paying for that. Here's how. Let's say your rate is at 4.5% and interest rates drop a point, right? You cannot subordinate that down payment assistance. You cannot refinance your mortgage with that second, because it's considered a second lien, right? After you've purchased that property. So the only way that you can take advantage of that 3.5% interest rate is if you pay back a portion of that down payment assistance money. And some of these down payment assistance programs are getting savvy to where you're not having to pay that money back on a prorated basis. You're paying it all back. Year 1, year 9, year 10 with 1 month left to go. you take out $7,000, you refinance to take advantage of this 3.5% rate. Guess what? That money you borrowed 10 years ago, you got to pay it back. So it's not free. It's not free in that sense. And then also, if you've got to stay locked into something, you know, a lot of people don't understand amortization. If you've got to stay locked into something for 10 years at 4.5%, you cannot refinance. That $7,000, when you think about the interest associated with your loan, is probably 3 times that down payment amount that you got. I mean, I can easily break down the numbers for you, but the money that you took out this year, you know, as it relates to, you know, trying to refinance or lower your interest rate, is costly. It's almost, I like to compare it to like a payday loan, right? Sometimes people need it. Don't get me wrong, but if you're in a position to come up with your down payment, or if you got a savvy realtor like yourself, who, for example, can set it up to where, you know, structure your deal to where your seller is paying all your closing costs. We're getting enough in tax proration credits. We can make $3,500 pretty much disappear. Okay. And so you're essentially getting down payment assistance or 100% financing because of your loan officer and your realtor working together to structure a deal that's going to work for you. You don't, you know, we get it. Some people don't have money to, you know, put down like that. They spent all their money taking care of the kids, or fixing their credit, or whatever it is they're doing. We get it, right? But there's other ways around, you know, down payment assistance, you know, and I do it all the time. Not everybody qualifies. You might have a debt to income ratio issue where you just don't qualify. That's where you and I'll get together and we structure it and we make it work for them, right? So yeah, I am not against down payment assistance. I'm kind of split down the middle. I can't say that I'm a big fan of it, but you know, I use it. I know how to put them together well for people. I like doing it for folks that really need it. I'm not a fan of folks that just want it because they feel like they're entitled to it. So yeah, there are some folks that feel entitled to it. So.
Now, do grants differ from down payment assistance? There are some grants that are out there or were out there. And I know you can't speak to all grants. This is like a general question. One in particular I know about, or I found out about at the closing table with my buyer, and this grant has gone away, and it went away before COVID, but the city of Chicago had a grant program where a buyer went to a home education class, and the city of Chicago actually kicked in 6% of the closing costs, which my buyer ended up walking away from the table with cash. But I will say that my buyer's credit score was over a 700. She had reserves as far as savings, as well as a 401k balance. So if she had to come to the table with money, she was prepared to do that. But like the home loan bank grant and some of those grants, do those come with stipulations, or the ones that you're familiar with?
Yeah, most of them come with, you know, their stipulations. A lot of them are, you know, they're driven by credit score, debt to income ratio. A lot of them want to see 45% on the debt to income ratio. Most of them want to see at least a 640 credit score. I do expect for a lot of these programs, once they do come back with higher credit score requirements, which is going to force people again to start looking at, you know, addressing some of those credit issues. And then the biggest one that we see is living in the property. You know, they want to see that you are living in the property. There are some down payment assistance programs that are out there for non-first-time home buyers. A first-time home buyer is considered someone who has not had title to property in the last 3 years. But then again, a non-first-time home buyer could have sold a house today and closing on a new house, get down payment assistance tomorrow. So there are programs out there where that is concerned. And then down payment assistance, the other thing about down payment assistance is that the money is given on a first come, first served basis. A lot of times, once that money is gone, it's exhausted. Sometimes you can maybe get money through a different program, but that program may not necessarily fit your profile. It may be something that you might have to pay back over time. And so with that being said, again, it takes me back to, once you get your pre-approval and you're out there shopping, you got X amount of time to get this done. Okay. And so, and we pay attention to stuff like that. I send out updates to folks all the time. Hey, look, you got a week left on your pre-approval, and the down payment assistance that you thought that you were thinking that you would get is kind of dwindling down. You need to make a move. So it's not necessarily, we're not, at you and on your heels, asking you to get something done because we want to make money. We're letting you know, and we're keeping you abreast of what's happening because we know how quickly this thing can change. Right. So, but yeah, those are some of the things that, a lot of the down payment assistance, the mechanics of them itself, they work pretty much the same.
And even that goes for your real estate professional, right? We're all working together. Yes, as a realtor, I make money, as a mortgage lender, Javon makes money, but bigger picture is usually buyers are coming to us. We're not going to individuals like, you need to buy a house today, right? So it's a decision that you as the individual made. We're trying to help you make that decision and not saying rush, but also understand that time may not be on your side. So some individuals who have been pre-approved or in the process, traditional and non-traditional, literally for a lot of them, things changed just because of COVID 2019. And that was the main purpose for us getting together and coming live today, was to talk about the changes and also for buyers and consumers to understand and be aware of what is going on in the marketplace, and understand and be aware when you get that pre-approval, you usually have about 60 to 90 days.
60 to 90 days. I usually, I usually put it together based on credit score. If you're in the 700s, I'll give you 90 days. If you're below maybe a 680, I'm going to give you 60 days because, you're kind of in that, especially if you just come out of credit restoration or something like that, we're always going to do a verification of, your credit. We'll do a soft pull in the end. And sometimes things pop up, it might be a medical collection or something like that might drag the score down. And so because we know we have a specific window of time to get this thing done, to kind of eliminate the risk of that happening, that is about the time frame that we're going to, I'm going to give you to make this all work. So.
Sounds good. Any final comments, remarks? I know working from home, my grandmother is here with me and her phone rings like, oh my goodness.
Final comments. I would just say, I think, I know this is some very uncertain times, a lot of questions, some folks are, taking this thing seriously, some folks aren't. I would encourage everybody to, look at this thing, the way it needs to be looked at. It is, I believe that this is a serious thing. As far as the virus itself, I think we can, definitely, come out on top and be stronger as a country. With regard to real estate and mortgage, we're looked upon, and it was no surprise that our professions, we're considered essential workers. Mm-hmm. And so what that says to me is that what we do is important. We have to make, we make this country go. Whenever, and I'm speaking of housing, whenever there's something like this that comes about, housing is, who is looked to. what you guys do is important. What I do is important. And so, because again, like I said earlier, a house is going to be the largest investment a lot of folks are going to make. So we can't fail, right? So yeah, there's going to be some bumps. It's going to be a little bumpy for the next couple of months. We'll expect that. But I still believe 2020 is going to be the year that everybody can see some success, whether it's the seasoned veteran realtor like yourself, or even a newbie. You're going to see some success. And people, again, I think this is the best time for people to purchase. This is like I said, it's a scary time, an uncertain time, but you're a financial person. You understand that a lot of times this is a lot of times when we see the interest rates at its lowest. So that's not the time to be afraid. That's the time to take a look at your situation and say, hey, do I have the type of job that is, recession proof? Do I have the type of job where, I'm going to have a job? Teachers, if you're in the healthcare industry, if you're in the financial industry, real estate, mortgage, we're going to be here. We good. And those are some questions that people have to ask themselves before they, get afraid and just take a step back. Ask yourself, hey, am I good? Yeah, you know what? I'm good. Let me make this move and let me see if I can take advantage, right?
Absolutely.
One last thought. If you're in the position to make your mortgage payment or pay your rent,
yes,
please do so.
Pay your bills. Please pay your bills.
Please do so. Please do so, because we again, a lot of uncertainty. We don't know how this is going to unfold, and we definitely want to make sure that credit and all that stuff is intact. Your relationship with your landlord intact. So I would encourage you to, despite what you might have heard or what Sally told you, pay your bills. If you're in a position to do that, pay your bills. There's a lot of organizations out here that are helping folks with doing that. Call your lender if you're already a homeowner and find out what's out there. But again, if you're in a position to pay your bills, pay your bills. That's all I got.
And just to piggyback off of that, he did say call your lender if you're having any issues. Communicate with your creditors, communicate with your landlord. If you have lost your income or you don't know what's going on with your job, you're not currently working, communicate. Don't hide and not say anything.
Exactly.
Communicate, have the conversations. A lot of creditors, everybody in the world almost that has social media and access to main news knows what's going on. So even your subscriptions, maybe cancel some of those temporarily, but communicate with your creditors and let them know what's going on with you. And if you do have the ability to pay, please pay your bills. And now is a great time to purchase real estate, invest in real estate. We'll see a lot of new homeowners, new investors, and new landlords come out of this market. One thing we know for sure is one, housing is essential, and two, most of us like living in a home with heat, running water. So housing is an essential basic need that we don't foresee going away anytime soon. So that's it. Thank you so much, Javon.
No problem. No problem. Thank you for having me. If you have any other questions, feel free to reach out to me. I am really exhausted email these days because the phone is blowing up. So if you have any other questions, you can call or text. I'm at 312-972-2824, or email at javon@midwestequity.com. That's JEVON @midwestequity.com. You can also visit my website at themortgagechampion.com, where it's information pertaining to mortgage there. Hope everybody stays safe. And they hit us up with questions, because that's what we're here for. We're here to answer questions and help folks navigate through this process. Thank you again for having me, And if you need me for anything, you know how to get me. And enjoy the rest of your day.
Absolutely. You too.